Good evening, this is Doc Severson for the Theo Night Report for Thursday, November 16th. I'm starting this video just a couple of minutes before the market closes on Thursday, but you can see that one of the big drivers for today's movement was Walmart. Walmart is the new tech startup that everybody has overlooked apparently, up $10 today, or about 11%. And today's move was also bolstered by Cisco, which is up about 5% or another $2. Again, Cisco, one of those stocks that just never seems to get anywhere over the past 10 years. So you can see kind of the impact of today with 23 advancing, 7 declining on the Dow. And you can see the big rock stars here on the Dow Jones Industrials. Again, Walmart as well as Cisco. So as we zoom out and look at the Dow Jones Industrial Average, the question on the table, obviously, after today is, okay, are we preparing for a big run into the end of the year? And I don't think that's going to happen. So let me kind of lay out the reasons why I think we're going to be still range bound into the end of the year. So first of all, what we have here is we zoom in on this. One thing we can definitely see, and this has been proven for the past year, is for us to get anywhere, for you to take one step forward, you got to take one step back. Or I would say even 2 steps forward is necessary to get one step back first. This market does not rise unless you build up excess negativity and it gets flushed out to the upside. So today was just a massive day of short covering from everybody thinking that here we go. So we've had 5 days in a row to the downside and the shorts are starting to get emboldened. And we were getting very, very close to the lower expected move target for the week. So let me bring this up on the spiders. So here's the lower expected move target on the week. We got very close to there yesterday on Wednesday. And I think a lot of people had just assumed that, hey, we're going to touch this expected move. A lot of people were loading up on this, expecting to see, just like what we had last week. Last week we had the expected move target hit to the downside and recovered from that. So expecting that today. And a lot of people got way too negative, way too late in the pattern, and this has been a no-no for the past year at least. So if we look at this and we say, okay, here's the slingshot move, the daily chart's got a lot of energy, this thing is heading for, in this case, the spiders are heading for 2,600 and beyond, and the Dow is going to be heading for 24,000. And it doesn't matter whether I look at the S&P or over here back at the Dow Jones again. Really, they're kind of identical right now. Yes, we do have a lot of energy here. There has been a lot of consolidation at the daily chart. But for the reasons I've been going over for weeks now, we have just zero energy right now. Just zero energy. We're just playing this shell game between different instruments on the Dow. I went into this weeks ago as we talked about the dogs of the Dow and the ones that probably were going to see money rotated into them, and we've started to see that as well too. It's just a big shell game right now. So my thesis is still into the end of the year that we're going to see the range expand, and not necessarily, I'm not looking for a 10% pullback or anything like that, but we are just going to see the range expand, and I believe we are going to see the price get to be more unstable. And this is one of the first things that you will see is when a market transitions into corrective, which is necessary from time to time to kind of hit that reset button on the markets. When it transitions into corrective, as we've already started to see, we will see extremely strong rallies from this. These are necessary. Why is it necessary? You've got to bring on, first of all, you've got to clear out the shorts at every opportunity possible. And you've got to convince people, you got to convince these weak hands to jump on board again. These usually get flushed out yet one more time. This is how markets operate. We go from these very quiet periods like this, like we had in mid-October, and we've started to see the shake and bake start to occur now. So the volatility is starting to increase, and we're going to see more and more of these. One of the most stunning characteristics of corrective price action is extraordinarily strong rallies, or these types of trend days where too many people just totally get it wrong and they've got to bail out of their positions, and they create, in effect, the next lower high. One of the best ways to spot this is just an increase in ATR. We had almost a historically low value of average true range setting up into mid-October. And now you can start to see that we are heading higher and in a hurry. And this type of action is going to generate that. This type of corrective rallies, big movement days like this is going to increase the ATR. So the ATR had bottomed out below 90 for the Dow in mid-October, and now we're all the way up to close to about 130 now. So that's a dramatic increase in average true range. And as you can just see this even now, the price kind of selling off into the end of the day. We're nowhere near the highs of the day at this point. This is exactly what happens. We start to set up these lower highs. They sell into the lower highs. The range expands to the downside. So I'll go back over to the triple pane of the S&P for a second here. So the closing bell just rang, and we're significantly down from the highs of the day. So could this continue and punch right through 2,600? I mean, it certainly could. Anything can happen. This is one of the things that I had to learn a long time ago, is the market can do whatever it wants to do, right? But it's leaving clues right now. It's leaving all the signs that we're starting to see the range increase. And these range increases occur and propagate on a fractal nature. So what starts with very, very low volatility on the daily chart and starts to increase. You can even see this if you look carefully. You can see how quiet things were, and then all of a sudden it starts to become unstable. It's almost like if you're driving down the road on snow and ice and all of a sudden the back end of your car kicks out. Next thing you know, if you don't get a handle on it, you're going to be going back and forth until you finally spin around. And this is typically what happens with markets like this, is that this instability will start to increase until it actually will propagate over to the weekly chart as well too. And so right now you can't even see these movements on the weekly chart. This is what I've been talking about lately, is like the volatility, the historical realized volatility is so low right now. This is actually a big change that we're starting to see ATR coming in, because it will propagate eventually over to the weekly chart, and we'll start to see these swings increase. And this is why it's so important, because this is actually good news for the health of this market. We need to have these charts recharge to larger time frame charts recharge. This is an unsustainable advance right now. If we don't get some type of volatility into this market, it will at some point collapse in a very difficult way, not unlike what we had with the Ebola sell-off, as well as all the way back here in 2010 with the flash crash. So this is what we're looking for. Again, I am eventually looking for higher prices. Once we get this correction out of the way, whatever that correction is, whatever form it takes, eventually I expect to see higher prices. I know that's not necessarily a popular opinion to have with most professional traders, but this is based on how markets move. Markets always propagate the volatility into increasing volatility, and that always ends up printing a higher high. So in other words, if we do have a strong move down here, even as far as 2,400, the next thing that will happen is eventually we will see higher highs from there before we will start to see that volatility set up with a lower high on the monthly chart. Remember, market tops are a process. Bottoms are an event. Bottoms are an event. Bottoms are an event, an event, an event. But tops are always a process. It's always extremely volatile near the top. And we have not had that volatility yet. So that's a huge missing signature right now before we can expect to see corrective coming into here. And so right now what I'm seeing is corrective is starting to come in. Actually, today's rally is good news that that corrective is starting to move in both directions. All right, folks, that is it for today's report. Thanks for listening. See you tomorrow.